Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday, it's the 3rd of July. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. And of course, if anybody needs to contact me, that's the address that you need to use. Just going to go ahead, bring up our disclaimers. The first one will be the high risk investment warning. Good morning, Kim. Hope you had a good weekend, and thank you very much for joining this morning. Hey, Howard. I had a good weekend. Hope you did as well. Thank you for signing in. Thank you to everyone who has joined this morning. Very much appreciated. Good morning, Michael. Nice to have you on the webinar. All right, let's bring up the market commentaries disclaimer here. All right, and just our references, FXCM, Market Scope, and Trading View. I actually want to start off with Market Scope. We'll go to Trading View shortly. Let's just take a look at the dollar. Okay, so this is the weekly chart. I'm going to take this moving average off. We can add it a little bit later in the webinar. Take a look at last week's candle. This is interesting. We had a very strong candle all the way up until Friday. Then we had the inflation data come out on Friday, and it's turned out to be a spinning top or a doji. In other words, it's a candle of uncertainty where bulls try to take price up, bears try to take price down, effectively ended flat for the week. Let's just take a look at this on the daily scale. And here you can see the, this is Friday's movement. You can see Friday's movement, this big movement down. It may be overdone. I want to just take you through the inflation numbers that came out on Friday. And for that, we're going to go through to Trading View. And what we have on the left here, we've got the headline PCE. On the right, we've got our core PCE. The core PCE is the PCE without volatile items such as energy and food. And you can see that the headline number is coming down really nicely, isn't it? You can see that it's moving down in this southeasterly direction. Here's the rate of change. You can see that it's on the deceleration side of 0. So the headline numbers look like they're doing really well in terms of heading towards target. We're at 385 there. Not so much core, not so much the core. The core is actually moving sideways. So we're starting to see some stickiness in that core number. That's going to worry the Fed. So the Fed's still going to be very much in a interest rate hiking type of mindset. Take a look at the rate of change. It's moving back towards 0. In other words, it's moving towards stagnation. That core really is starting to be sticky. What I think is happening is what we're seeing is what we call a base effect. What I suspect, remember, the core doesn't have energy. The headline does have energy. So I would suspect a year ago we had very high energy prices. I think those energy prices have come down, and that's been reflected in the headline number, whereas we're not seeing that in the core. So the core really is more what monetary policy is really wanting to deal with. Monetary policy can't deal with supply side inflation shocks. That's in the headline number. The core number is more on the demand side. That's what monetary policy is aiming to do. So I think that the Fed here is still going to worry about this, even though the headline's coming down quite nicely. Let's just go through to the 2-year yield, see how the 2-year yield has behaved. And the reason we're looking at the 2-year yield is that it's a good measure, a good proxy for monetary policy. The reason it's a good measure for monetary policy is because it tends to move quite quickly when there is a change in the cost of capital. So you can see, well, wait a second, look what's happening here. It's actually still moving up. This is the daily chart. So you can see we had some big moves even Friday. So the Fed is still looking quite hawkish, in my opinion. And if the Fed's looking quite hawkish, let's go back to the US dollar and let's actually do it on TradingView, and we'll take a look at the correlation between them. So I think what's happening, the US dollar is lagging. The question is it going to play catch up? So let's go ahead, bring in the US dollar here. Okay, so you can see that the 2-year yield's moving in that northeasterly direction. What we have seen previously is that the dollar moving in this southeasterly. Okay, it's moving the south. So there's almost a decoupling here. Let's just take a look at it on the weekly scale. Okay, and you can see that the 2-year yield very hawkish. And I think that last week's price action, I was looking very carefully at how it was going to end. The way it ended surprised me, and you can see. So I'm just going to go on mute. I can feel a cough coming. I beg your pardon. Okay. Let's just go through to this weekly. Remember, we were looking for a potential reference candle reversal. Now, why were we looking for a reference candle reversal is because reference candles have to be present at swings. They don't necessarily lead into swings, but if there is a swing, I will show you a reference candle reversal. What is a reference candle? A reference candle is made up of 3 candles, at least 3 candles. The reference candle has the lowest low when we're talking about a bullish reference candle, and then the candle to the right of it moves above the reference candle's high and closes above the reference candle's high. And that's what we were looking at last week. We were looking at the conditions. Now look what's happened here. Here's the reference candle. Here, this reference candle is actually 4. It's not 3, but it doesn't matter. It's the theory is the same. Here's the lowest low. This last week's candle took out the reference candle's high, and then we were looking to see if it was going to close above the reference candle's high, and it didn't. So we don't have the swing. We don't have the platform for the swing just yet. So this week's candle is going to be very interesting, and I think we're going to have to be more prudent. So I'm going to put the measuring line over here. So we need this week's candle to effectively take out last week's high. And if it takes out last week's high, we'll call that the completion of the reference candle. And then we may have a dollar swing. Now, why we've got to measure that is because if the dollar is starting to swing, if the dollar is starting to trend, it filters through to all the other instruments. The fact that the dollar refused to give us that third condition, I think, is quite telling. It means, so trading's been quite difficult because the dollar has been drifting sideways. That drift continues, and that means trading difficulty continues. What we have here is a sideways consolidation. We have it moving in this symmetrical triangle to the side, and that wasn't resolved last week because the dollar behaved quite strangely on Friday. You can actually take a look at the RSI. The RSI is above 50, but it's flattened. Can you see how it's flattened remarkably? And that makes me worry that we're still oscillating around the 50. Why are we spending so much time on the dollar? Is because without the dollar moving, it really makes it a challenge to find other instruments that are moving. What I'm going to do here is just put in my watermark. Let's see, it's missing. There we go. That's better. All right. Let's just take a look at US dollar on the daily chart. And it's on the border of zone 1 and zone 2. It actually dropped back into zone 2 on Friday. You can see that it came right back into zone 2. And zone 2 is between the blue Bollinger's. That's our neutral area. Okay, if there's going to be a movement down, it's going to take place in zone 3. If there's going to be a movement up, it's going to take place in zone 1. Well, it's battling to get back into zone 1 at the moment. So just to start off the week, there is, I think, some natural difficulty because of the lack of trend coming through from the US dollar. We're going to monitor the dollar every day this week to see if it resolves this sort of sideways type of bias. Okay, so the fact that the US dollar is not moving as I would have expected. Let's take a look at euro and cable, see what's happening on those two currency pairs. Let's bring up euro. And what we'll do is we'll also take a look at gold, and we shall take a look at the DAX. All right, so here, look what's happening with the euro. Because there is a sideways movement in terms of the dollar, potentially that's filtering through to a sideways movement on euro. See how just for the last few weeks we've been moving sideways. Take a look at last week's candle. If we had got dollar strength last week, we would have expected to get euro weakness, right? But we were missing condition 3 on that reference candle. Well, take a look. We're missing condition 3 on the euro as well. So we're looking for a bearish reference candle just to tie in with the dollar movement. Seeing the dollar movement didn't deliver, neither has euro delivered. So we're looking at the reference candle here. So for a bearish reference candle, would have a 3-candle cluster with at least the highest high. Well, here's the candle with the highest high. And then we would look for price to take out that reference candle's low and close below it. We just don't have those two conditions. So some sluggishness, so to speak, coming into euro US dollar as well. You take a look at this on the daily chart, we're in the middle of zone 2. We're in the middle of zone 2. So the sideways movement, unfortunately, is I think going to be a headwind for us, because it's much easier to trade a instrument that's moving, that's trending, than something that's in neutral, that's moving sideways. It's going to make life a little bit more difficult for us, and that's why we're going to have to monitor dollar movement all through this week. Let's just take a look at cable, see what's happening on pound US dollar. Okay, just bringing up the pound US dollar here, and then we'll take a look at gold and DAX after. And let's just take a look at this in the confines of the last 4 candlesticks. Let's take out all the markings so we don't get drawn into that. And let's just see if we can work out where the reference candle would be for cable. So a very interesting chart. There's a lot happening here actually. Let's just see with the high here, 128.481. Okay, so this is actually the reference candle over here. All right, and if there was going to be some sort of reversal, we're not close to touching the low of the reference candle. But take a look at this. Let's cancel that. A lot more ambiguity coming through with the pound US dollar pairing, because here's a potential bullish reference candle here last week's, and well, this would be quite interesting to see if we get a bullish reference candle reversal here. So let's just keep an eye on that. There's very much speculation, very much ambiguity here. Are we seeing a bullish reference candle complete, or is there still a bearish reference candle to complete? We're drifting sideways. Let's go down to the daily chart. Lo and behold, take a look where we are. We're in the middle of zone 2. So again, let's just reiterate what we've looked at US dollar, we've looked at euro, we've looked at cable. All three of those seem to have a sideways bias to them. That's going to make life difficult for us as traders. All right, let's go down to gold now, and then we'll take a look at the DAX. Okay. So with gold, the definition of a trend is a high trough, higher peak for an uptrend, and then a lower peak followed by lower trough for a downtrend. If we have to take a look at gold on a weekly, let's just get all these labels out, and we can see we don't have more than 2 points here. We've got a higher peak, and we're looking at the low trough. We don't really have any zigzag with this leg here. So we haven't started a downtrend, but the uptrend's been cancelled in gold, and there is a slight negative bias with the RSI. It's below 50. The fact that the dollar is moving sideways, I think, is directly impacting on gold, and that's why we don't have any peak and trough to determine whether gold is trending. So what's interesting though with gold, it does have a slight way on it. And what I mean by slight way on it, it's in zone 3. So whilst we've seen dollar, euro, cable all drifting sideways, gold perhaps having more pressure on it to the downside. So the fact that it's got more pressure on the downside, the fact that it's in zone 3, let's just go down to the hourly and see if there is any potential signals on the hourly chart. And what we can do is we can wait to see if we get a crossover, a negative crossover of the EMAs on the hourly. And then we can see that the stochastic, which is momentum based, has already pushed south. So we need the EMAs to show angle and separation to the downside. We need the stochastic to move to the downside and hit 20 minus. And if it hits 20 minus and holds, then potentially gold heading south, which out of all of the instruments we've looked at this morning is the one that's probably got the heaviest bearish way on it. Let's take a look at the DAX. Okay, so DAX is also interesting. It is moving generally sideways at the moment. I think that last week's candle is the reference candle. It's got what looks to me to be the lowest low. Let's just double check that. So the low here, 15,702.31. Yeah, so this is the lowest low. So what we could do is we can keep an eye out for a reference reversal here. Okay, can see if there's going to be a reference reversal. At the moment, we're still battling to get into zone 1. So there was this big movement up on Friday. I think that the inflation print helped that to a large extent, but it's battling to get into zone 1. So even the DAX has that neutral theme attached to it. So we're just going to have to see if we can get into zone 1. Once we get into zone 1, we can start looking to see if there's going to be crossovers to the upside. So we're right on the border of zone 2 and zone 1, but we're not quite in zone 1 yet. All right, so that's as far as we shall go this morning. If there's any questions, please go ahead and type those in. Any questions? Go ahead and type those in. I think the main takeaway is that there is a general sideways movement, Perhaps gold got the greatest weight to it in terms of some sort of trend. It's in zone 3. The others all battling to get into some sort of trending position. So we'll keep an eye on that the rest of the week. All right, let's wrap up here, guys. Thank you very much for joining me. Have a great day, great evening ahead, and we shall chat tomorrow morning.